Mayuresh Joshi joins in on the show right now. Mayuresh, hi afternoon. Just wondering whether a move on Reliance is sustainable and whether there are enough fundamental triggers right now in place.
Afternoon, afternoon, Aisha. No, obviously, I think Singapore gems have come off in the last few weeks, and therefore the refining segment for the better part of the second quarter and the third quarter, if they stay at these levels, can be under some sort of pressure. But we all know that Reliance has access to multiple feedstocks, and even if Singapore GRMs have corrected to around $6.50, uh, an outperformance of $2 to $3, to say the least, can be expected from Reliance. The retail part of the businesses are holding up right well. So you've already seen Geo do reasonably well in the past quarter. Reliance Retail with the opening up of new stores and the expectations in terms of more leverage kicking in as the festive season comes around in the next few weeks. The next couple of quarters should be good from the retail side of the business as well. When it comes to the oil and gas part, I think that part of the business is showing significant signs of improvement. And therefore, I think the number should be reasonably okay for Reliance as we head into the second as well as the third quarter with all the assumptions at play. So I think anybody holding on to Reliance can definitely.
If you're holding on to Reliance, continue holding it because there could be some improvement that could be there on the anvil as well. The other space, Mayuresh, that I want to discuss with you is also IT. Of course, from tomorrow we'll get the initial data set. Tomorrow will be Accenture and it will come out with its FY24 guidance. So that will kind of set the tone for what's happening to the client spends globally. But even Morgan Stanley came out with a note today saying that yes, Q2 is going to be a bit of a weak quarter and we all know about it. The fact of the matter that you should be debating is whether FY25 will see the double-digit growth returning or not. Which side of the debate are you on?
So I think that's exactly the middle line that we are treading on, Anisha, as we speak. A very good afternoon to you as well. What is really transpiring is how you divide this space into the large cap and the mid cap universe. And the mid cap universe has done phenomenally well. Even in the previous quarter, when the large caps have shown significant signs of consolidation and to a certain extent, some element of profit booking or deterioration in price as well. Mid caps have probably held up for two or three reasons. One, I think the commentary surrounding pricing, the commentary surrounding order wins remains extremely strong because the targeted bucketed list that they probably have between $1 million to 5 million and up to 10 million for mid-cap IT companies, those order wins and those transformational deals when it comes to AI and the associated spaces there itself still continues at a rapid and a very good pace. The other space, ER&D, where a lot of companies like KPIT, Tata Elxsi, Sonata have done well, continues to do well with the rapid acceleration in spending globally that we are seeing from global OEMs and the domestic OEMs as well when it comes to ER&D expenditure and the building up of new product stroke platforms. So that part of the business should continue holding on with reasonable amount of margins. And the third part in terms of the margin profile itself, the margins should hold out. A lot of wage payments, increments have probably happened in Q1. So they should stabilize in Q2. And as costs stabilize going forward, along what we've seen probably in terms of currency terms, I think mid-cap IT's outperformance might continue. One might very well argue valuations are through the roof, which is the case, but the momentum, if somebody is holding on, can continue. Does that make a case for large-cap IT investing as well? My own sense is that a lot will depend more, as you rightly pointed out, in terms of what guidance Accenture probably gives out. Valuations definitely better off compared to the mid-cap players at this juncture. The kind of deal wins that have got announced to a large extent expected in terms of what they have probably given out in terms of guidance for the whole year itself. And therefore, I think the typical strong quarters, Q2, Q3, and Q4, where I think a lot of action will happen in terms of order determination. I think it all depends on how the US and the European economies probably shape up. So I think very cautious in terms of taking positions in terms of mid-cap IT. If you're holding, the momentum can continue. Large cap seems to be a better place from a valuation perspective, but one needs to be selective here. Can have something like an HCL Tech Mahindra on your list.
Mayuresh, do you track these Inox wins, Suzlon, GMR, GVK of the world? Because they are doing quite well for themselves, of course, in the recent few months. People are calling it the turnaround story. Would you buy that argument?
So I think a lot of price action has already happened, Anisha, in terms of expectations of what will now happen for the sector as a whole. So 10 gigawatts expected to be added over the next few quarters and few years as well. NTPC, as we understand, is expected to lay out a huge tender when it comes to wind energy itself. And therefore, I think a lot of changes which have probably happened in terms of tariff determination, because a lot of these companies actually got hammered down as tariffs were low and input costs were significantly higher in that periodicity of the last 7 to 8 years. With the changes and with the interstate transmission charges that have probably taken place, what can really transpire is better numbers when it comes to balance sheet growth. Obviously, I think the kind of leverage that these companies have should come up quite significantly. And the existing players are the only players which are probably left out of that entire pool, which was getting serviced, which was servicing the sector as over a few years back. So yeah, I think the space looks pretty interesting. Structurally, I think there are a lot of growth drivers in place for the next 5 to 7 years, and that should drive earnings quite significantly for the sectors.
It's about Senco Gold. In fact, Mayuresh, have you looked at some of these recent IPOs or recent listings and the ones which are underway for subscription as well? Anything that caught your attention?
No, so Senco looks pretty interesting from the space, as Vinny just explained. They're opening up franchisees. East is a big region for them. And generally, I think if you look at the gold market or the jewelry market itself, the unorganized players, I think should slowly and steadily start coming down. The organized shares should start moving higher from 32% as we speak right now to 40% over the next few years, aiding a lot of these organized players at large. So yeah, Senco looks like a very interesting play. Kalyan probably looks like a very interesting play. We'll also like to have something on our watch list, a stock like an Idea Forge. Now, defense stocks have done phenomenally well, Anisha. And what Idea Forge does in terms of its drone development, a lot of expectations in terms of drone orders expected to be released over the next few quarters. They've got almost a 55% share when it comes to the drone market, which is largely dominated by defense as we speak because of regulations. Because as rules start getting more easier over the next few years and more civil and agricultural users start coming into play, the kind of product suite that they probably got is very, very interesting. And the kind of numbers, specifically margins that they probably produce, are going to be well maintained going forward as well. Yes, technological changes, what happens in terms of imports. I think the government is doing a lot more on that in terms of Atmanirbhar Bharat and the manufacturing in India that we probably have. Therefore, I think something on a watch list. I think the price action is already damaging at this point of time for Idea Forge. But I think these two players over a longer period of time, Senco from the jewelry space structurally should start doing well. And even this player like an Idea Forge for the drone market, where the structural story probably remains very, very strong over the next